Hey, what's going on, everybody? Welcome to this week's Rapid Review. We had a very eventful week. A lot of the questions that we had from last week ended up getting answered this week, which wasn't guaranteed, but was definitely welcomed. So, yeah, without further ado, let's get started. All right. So, real quick, if you are catching this, it's also going to be on YouTube if you prefer to watch on YouTube. So, feel free to catch that there. And for the people watching live, definitely drop some comments and questions or even say what's up in the chat. All right. So, starting things off, market direction, we are an uptrend and also a power trend. So, as of Friday, both the NASDAQ and the S&P locked in a power trend. So, it's a super positive signal in terms of the overall market trend. We'll look at that a little bit later on the indexes, but really nice to see that indicator get triggered. Overall, this is the 30th trading day since the rally day that we had, and the 19th trading day. This is talking about Friday, 19th trading day since the 22nd of April, which is what I called a follow through day in that situation. In terms of distribution days, look on the screen, we have 0. We had one going into this week, which was dropped off on Tuesday the 13th due to price action, and that was on the S&P. So that leaves our distribution day tracker at a 0 across the board. Another positive sign, not seeing any of that selling coming in. But yeah, going on looking into what happened this week, like we said, super eventful week. S&P up 5.27%, NASDAQ up 7.15%, Dow up 3.41%. So massive up week on all three of the indexes. Super positive action. And because of that, the S&P managed to squeak out a gain for the year, now up 1.3%. The NASDAQ is just floating below, down 5.52% for the year. And the Dow up slightly, 0.26% for the year. So massive change from what we've seen in the prior weeks, of this year. So seeing us go green, super positive action for the bulls. Looking at your moving averages. So green on all the major ones, S&P, NASDAQ, and the Dow. The Russell, we are just below on the 200-day simple moving average, so the small caps lagging behind. But you'll see when we go over to the indexes and we break down the charts, the big thing was the huge gap we had right through that 200-day simple moving average. That was a key level that we had talked about last week. For many people, being above that 200-day simple moving average is really what determines whether or not they are long or short the market. So being above that 200-day simple moving average and the way we gapped aggressively through it was a super positive sign. Other small things, we had the 10-day simple moving average on both the NASDAQ and the S&P cross above, which is positive. And like we said, just the Russell is the only one that is got one red below the 200-day simple moving average. I will say, obviously, the moving averages, certain things happen. It is a good sign, but very often, because it's based on prior data, it is a kind of lagging indicator per se. But needless to say, all these things, super positive action in terms of the longer term overall market trend. So with that being said, let's jump over and take a look at the indexes. As always, I like to start off with the NASDAQ. We're looking at it on the daily. Like we said, here we go right here. Big gap up through that 200-day simple moving average, but also a big gap up through this 325 prior high that we just had. That was the real main area that I was kind of really watching at, because we were showing some real resistance here. And if we got rejected off here and then just continued down lower, then that uptrend would kind of look like it was at least either going to be some sideways chop or possibly going down further. So the way we aggressively gapped up through that price point was very positive. But throughout the week, we just continued to climb higher and higher. But we did stall right around here, which if you zoom out a little bit, is pretty much coinciding with the bottoms of that choppy action that we saw coming back from like December all the way to about mid-February. So this choppy action kind of pulled right up to the bottom of it, and we're seeing some tightness there. Getting through and making another new high from this little area right here is what we really want to see if we're going to continue the uptrend, obviously. But one of the things that's very interesting about this market is how rapidly we've gone up and how very, very small, minus this pullback right here, it's almost like we didn't even really have much of a pullback. People were talking about it on Thursday, like, okay, maybe we're getting that pullback that we're due for. And then it kind of rallied and we closed, yes, down for the day, but overall, barely down for the day. We were only down 0.18%. So didn't really get the pullback that a lot of us, I think, were expecting. A lot of us were truly looking for. Regardless, this is a powerful market. We are trending upwards. And with that being said, understanding how rapid this move up is and that a pullback is something that is very, very likely. So in terms of that, one of the things that I did want to add on is when we get this far extended on the market, it can be riskier putting new buys on. And this is where a lot of people say, the market's in an uptrend, I'm buying breakouts, why are they failing? And very often it is because the overall market is very extended. Maybe the stock you're looking at is breaking out, but the overall market pressure pulls that stock back a little bit and you get a failed breakout. Very often those stocks, if they are a good stock that is going to go and continue on in the further trend, you do see that stock re-break out and you end up rebuying it. But just something to understand that when we're this far extended, a pullback is expected, and there is a little bit of added risk with how rapid that we have run up on the market. But look, overall, uptrend, we're in it. We got the power trend. The 50-day moving average is sloping up, and on the upside, kind of break through this kind of bottom of this choppiness. And on the downside, really just watching, for me personally, the first thing is going to be that 21-day EMA. And then after that, it would be the 50. But for now, I'm really watching an eye on that 21-day EMA. And you could also be looking at maybe the gap down, the gap up, low the gap up, kind of create higher lows is really what we're looking for. Let's jump over. Whoops. As you can see, I do not pay for TradingView. We'll jump over to the weekly. Yeah, look, again, seeing the same thing just from a higher level. The big thing for me that stands out here is just the amount of volume that we saw coming in on the upside. All these big up weeks, closing near highs. We actually closed in the 99.82% closing range on the weekly. So super, super strong week, very, very positive. Looking at the S&P really quickly, not much more to say except there was actually no down days this week, and we've seen very, very few down days, just completely up. But you do see that the volume does kind of start to taper off. So as we continue to climb, the volume very uniformly declining. So something like we said, probably going to see some sort of stall or pause here, but time will tell. Can't predict what's going to really truly happen in the market. Other than that, that's all we have. Like, look, just understand we're extended from the market. The market's very extended. Understand that overall we're in an uptrend. In fact, we're in a power trend. And just be wary of those when making new buys. But things are looking good. So now what we're going to do, we're going to jump over quickly to Deep View. And what we're going to look at over here is just the Deep View theme tracker. So over here I have the 1 week, the 1 month, and the year to date. And we're starting to see some changes. We're starting to see some shifting going on in the themes. For growth stock traders, this is a positive shift. If you look at what we had year to date, many of us, I think, were seeing that the miners, China stocks, and also some of these consumer staples, which is really dropping off now, we're really leading out the year in the beginning of the year. And now, as you can see in the past month and in the past week, we're seeing a shift towards more of these growth type stocks. The miners, consumer staples, those are all starting to kind of drop down. And we're seeing a little bit more strength in blockchain, semiconductor, solar, technology, software, some of these more growth style plays, which I know most of the people that are probably watching this and that follow me are styles of Minervini and CANSLIM, styles like that. These are the type of industries that we're looking for, those big growth stocks, those stocks that are changing the way we work, live, and play. And it's positive seeing that shift both on a 1 month and a weekly basis. Eventually, we'll probably start seeing that populating more in the year to date. But for now, I really like focusing on the 1 month because I think that gives us a little more of a honed in view on what's currently happening. We'll also look quickly at the group ranks, and we're kind of seeing the same thing over here. Looking at the group ranks in deep view, you can see on the 3 month time frame, looking at utilities, insurance, food, beverage, tobacco. A lot of those plays where these big institutions are putting money into here, more safer spots to park their money. Thrift, mortgages, tobacco, utilities, aerospace, defense, all over here. But now, again, when you go to the 1 month and the 1 week, semiconductors, software, restaurants, I think we're in one of these too. Just you're seeing a shift, very clear shift to growth stocks. Positive sign for what we are looking for. Uh, Again, keeping in mind how extended we are on the market, but in terms of the overall trend, this is all positive action. Despite what you hear going on in the news, we're seeing a lot of positives going on in the market. So for my final I guess, synopsis of what I am seeing, I think this market definitely warrants a 80 to 100% invest in the market. I'm seeing a lot of breakouts. I'm seeing many of those breakouts working. I'm seeing a lot of stocks that have formed good chart patterns, have kind of run up the right side. Many of those extended, but looking like they are possibly forming some tight areas where there could be some purchases made. Overall, it's one of those markets where, yeah, green light to buy. Just understand what's going on and the risk with all setups, but seen some good positive action within the market. Last thing I figured I would kind of throw out there this week, we'll jump back over to Deep View and just wanted to take a look at one of the lists I have. This is just some of the, I don't know why that's on the 1 hour, but some of the stocks that have been performing very, very well. And we'll just blow this up so you guys can see. And for those of you who don't know, I am a Deep View partner. If you are interested in their product, reach out to me. I'll be glad to explain, show you some stuff. Also have a code and a link so I can get you guys a discount and a link that kind of explains a lot of what I love about this tool. So, all right. This is one that's gone on a great run. This is all on the daily. Sizzle. Uber, a lot of people talking about Uber. That's gone on a real big run. This was one that was kind of tough to get into. There's a couple spots, kind of broke out right at the beginning of this market rally, pulled back, but it's continued to ride pretty much that 10-day simple moving average. Really strong RS, positive action. This is one that I'm watching too. Coinbase, especially with everything that's going on within the blockchain, Bitcoin. This is starting to show some relative strength. We had a ton of volume kind of pop in over here, and not something I'd be willing to buy right now, but I'm looking to see if we can get some sort of VCP or some sort of tightness that would give an entry over here. And just to really kind of summarize, anything that you see in gold is something that I own. Anything in red is just stuff that I'm watching. HIMS is another one that I own. This stock has gone right up the right-hand side, pulled back to the 10-day simple moving average, bounced off, and really working its way, hopefully, to all-time highs. There are a lot of these also in the aftermarket. On Friday, did pull back on some news, but still, I think a lot of these are looking really good. Zscaler has just taken off, really extended right now, but another positive performance within what's going on in this market. C Limited, I know a couple of you that own this. I don't, but this has gone on a nice big run, broke out of this kind of tight area and just kept going. Toast, another big gap up and kind of going on the run through this tightness over here. I'll kind of flip through these. Netflix, one of the bigger caps. This is one that I owned, breaking out this kind of double bottom. It's gone on a run up. So I'm sure, and I hope you are seeing a lot of the names on this list that you are also tracking yourself and hopefully do own. I'm not going to kind of sit through everything. Hood's another really popular one. I see a couple people in here. If you guys want to talk about any stock specifically, drop it in the chat. I'll bring it up. But point of bringing this up is just kind of showing you there is definitely a lot of growth stocks that have either A, broken out and gone on a big run, B, just broke out and are kind of looking pretty good, or C, they're really forming a base and we're kind of looking to see if they could tighten up and give us a good entry. So a lot of positive action. But yeah, if nobody has anything that they want to add, then I'll give you guys a couple seconds. That's all I got for this week, though. Going to be doing this every single week. And if you want to catch it on a recording, I'll have it up on YouTube. I'll have it up on here for a replay. And if there's any feedback that you guys have, anything that can make this better, let me know. Just trying to bring as much information out to everybody in the market. And like I always say, try to build a community of like-minded traders so that we can all get better together. All right. Well, that's it. And look forward to seeing you guys again next week. Have a good one.